G'day folks, welcome back to Pete's Investing. It's April 11, 2024. This is the SP500, the NASDAQ, the Japanese Nikkei and the GermanDax update. And the price has declined further since our last update, hence the red arrow downs. And our heat map shows, as you can see, we're still bullish on the monthly, but overall we're bearish on the daily, bearish on the weekly for the Japanese and the NASDAQ, and neutral and most likely bearish will be bearish on the US market. SP500 and the GermanDax in the coming days possibly. You can see there all the other heat maps indicators for the other instruments, which I do publish occasionally on other videos, so keep an eye out for those. First, looking at the S&P 500, zooming out, we look at the daily first. The stochastic market forecast indicator is overbought, making a very slight turn to the downside. On the hourly, it's already broken down from the overbought, down approaching the 75 level. So I'll keep an eye on that, obviously. And zooming in, I've got the I've drawn the Fibonacci retracement for this bearish divergence on the CCI versus higher highs on the price, and that's our initial target area between the 23 and a 38% level. Now, of course, it could go a lot lower, but at the very least, that's our target area if it continues down. Of course, this can fail if the market takes a turn for the upside. Then and the CCI starts turning up higher than that point there, then we're going to invalidate the divergence, in which case we start looking at further highs if it breaks, especially if it breaks above that resistance area. But at the moment, not looking too flash, although it's not catastrophic yet. On the hourly, if I zoom in, we had a few, you can see there I've drawn a few bearish divergence and had a couple of bullish divergence as well. So just be mindful of those, they do occur, and that was fluctuating within that range. They're all hitting their targets. More recently, we had this bearish divergence versus higher highs on the price, breakdown hit our target. We did have currently we've got a bullish divergence there versus lower lows on the price, and I've drawn a target area, and that's again a Fibonacci range. I'll draw it for you here, and it goes to the previous high before that divergence started, and that's a minimum target range. Of course, it can go higher, but that's where we're looking at seeing it coming up once this triangular consolidation breaks out. Now, also, before I leave here, I did have this little dotted line here, that's a 61% Fibonacci retracement. I did say previously, and that would have been, actually it would have been that previous low there, on that 61%. Now it's actually broken below that once, and it's come down and done it a second time, but actually broken lower. And as it keeps breaking down, we're going to keep moving this Fibonacci retracement to see how it tests it. So you can see there, if I move it right down to there, it's actually bouncing off that 61% right down to that level. So at the moment, that's a key area to look out for. If I zoom out, if I keep lowering that Fibonacci, it's just going to add to the suspicion, or that it may continue further to the downside. So that's where we're looking at now. We just look at Fibonacci's to recent lows and highs, and that's where we look at that 61% level of a potential bounce. And if it breaks through that, then we look at the next level down, which will most likely be that area there, and that'll be our next key resistance area. Next, we look at the GermanDax. Now here we've got on a daily, it's in the overbought, making a slight move to the downside. Similarly, on the hourly, it's broken down, resting on the 75 level. We need to see it break below the 50 level to be a lot more bearish. If I zoom in on the daily first off, you can see there that bearish divergence on the CCI versus higher highs on the price. I've drawn a Fibonacci retracement, and that's our minimum target. And if it breaks below that trend line, then we're looking at hitting that at the very minimum. Again, if it breaks below the 61%, that's a very, very bearish outlook on the daily especially. On the hourly, again, similar to the S&P, we had a lot of, there's a lot more volatility on the CCI 150 on the hourly chart, less so on the higher timeframes. In this case, you can see we had a few bullish and bearish divergence along the way, along the journey, and I've marked them with little rectangles where the targets were hit. And currently we've got a bullish divergence, higher lows versus lower lows on the price. And again, if I drew a Fibonacci from that high to that low, the target area will be roughly in that area there as a minimum. Next, looking at the Japanese market. Again, overbought. No sign yet of a major pull to the downside on that indicator. The stochastic market forecast on the hourly is already bouncing off that 75 level a few times, and it's actually penetrated to the downside very slightly. Zooming in, again another bearish divergence versus higher highs on the price. This one has actually hit our target between that low. So we'll see how it goes. If it breaks a lot lower than that, we're going to start measuring the 61% level. And it may well come down. And you see here I've drawn these diagonal trend lines. That possibly could be a key area to look out for if it breaks much lower than that 61%. But at the moment, early days, let's see how it goes. It may well bounce off this support at 38,300 before even making further downside. On the hourly, again zooming in, we did have a few bullish and bearish divergence marked by these rectangles, and at the moment we've got no divergence because we've got higher lows on the CCI and also higher lows on the price, so no divergence to talk of. So that's not a area yet. It could actually fall lower. It doesn't mean anything, just means there's no divergence there. It doesn't mean we're going to necessarily go long or short, but you can see there on the hourly it's broken above on the moving average band of the CCI 150. But at the moment I like to look at the monthly, weekly and daily, and as you can see there, the Nikkei is bearish on the daily, but it's also bearish on the weekly, even though it's bullish on the monthly. But weekly and daily it's bearish, so predominantly bearish trade should be taken. Lastly, looking at the NASDAQ, and again zooming out with the stochastic market forecast 1600 overbought still. On the hourly chart, that's actually broken down a few times here, and it's touched and bounced off that 75 level, and it's doing the same thing as coming near the 75 level again. Now if we zoom into the daily first off, again there's that initial target area between that Fibonacci low and high, and that coincides with that support at 17,762. Now again, if it breaks through there, then the next level will be to look out for is a 61% there, and that may coincide as well with this ascending diagonal trend line, so we'll keep an eye on that as it goes. Now notice also on the hourly we did have a few divergence, bearish and bullish, and I've marked them with these little rectangles where they occur. And currently we've got, back here we had a bullish divergence up until those points there versus lower lows on the price, bounce hit our target, and currently between that low and that high there, or that higher low I should say, that bullish divergence on the CCI versus double bottom on the price, then we expect it to bounce, and initially probably somewhere in this range there, which will be the Fibonacci range between there and there. So just I use divergence more of an area to get out of trade. So if you're going short, that'd be an area to look out for if you see a bullish divergence to get out of that trade. But otherwise, the NASDAQ is still trending down according to our heat map. Just be mindful, still bullish on the monthly, but on the weekly and daily, we're a bearish outlook on the CCI 150 on the weekly and monthly on the NASDAQ. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.